Unlock your potential with a comprehensive suite of investing tools and expert education with GammaEdge. Start your free 14-day trial today. Let's take a look over at the cumulative tick. I want to make sure everyone's aware of this because everyone's got itchy fingers to go long. You can do whatever you want, but just be aware that we are prone to failure. There you go, Tom, another call out there to the prone to failure. So if you're bullish, today is going to be a trigger day up, and that means that you would enter your longs early if you get a continuation pattern up. And that means the CT stronger and continuing up. So it closed higher than the previous day. That's good, but you can see it's been in a long-term downtrend. If you're bearish, it's now telling you to sit on your hands. It's that simple, right? This is appropriate for the 0DT folks. Pay attention. A little more out in time, 1 to 3 days. This is what we call the railroad track pattern. It's been moving down consistently. If you've played this trend to the downside, you've been rewarded handsomely. This is why we do it. Yesterday, we had a reversal where the moving averages start crossing. These are very short-term moving averages on the cumulative tick, and you can see that we now turn it off. And we haven't confirmed to the upside yet. So if you're bullish, the pattern is off, and if you're bearish, the pattern's off. So this is telling you to back away from the table. Unless you see a real high probability trade coming in, this is telling you you're at a pivotal point and you should be cautious. The longer term, what we call the ribbon, we only really pay attention to 2 moving averages in there. One of them is the cyan, which is a longer moving average, and one of them is the red, the shorter moving averages. They're both in a downtrend, and they're inverted. This is a bearish inversion, and this basically tells us that since red is below cyan, and we're down below it, we're in a downtrend. Nobody is surprised by that conclusion, but this helps you get on the right side of the market if you have any doubts. Do not get big on the long side if you are in the market. When you put it all together, it looks like this. This is the view we normally show. You need to be able to disaggregate it like we were just doing in the previous 3 slides so that you know what you're looking at. You've got 3 distinct time frames shown on this composite. Make sure you understand that, and the only one that applies today, because we are bearish, because the overall trend is down, is what we call TC1, and that is basically we're in a downtrend because these 2 are either non-confirming or are actually bouncing upward against the primary trend. This is the primary trend. Heed it or you will pay in drawdown, intratrade drawdown.